Proof before promises, people. If you're about to invest into a multifamily deal or any other deal for that matter, just because they seem like a good person, stop. Do yourself a favor and watch this video first. Because if you're thinking about investing into a multifamily deal, listen carefully. The operator you choose will make or break your investment. Not the market, not the building, the operator. You can take a mediocre deal and put it in the hands of a great operator, and the chances are you're still gonna come out ahead. But you can also take a great deal and put it in the hands of the wrong operator, and they will find a way to destroy it. And that's how people lose their life savings in can't miss apartment opportunities. The performer looked perfect, the pitch deck felt slick, and then 3 years later, they're staring at capital calls, missed distributions, and even worse, radio silence. My name is Bouchard, and I've acquired many apartment buildings and renovated hundreds of units in one of the toughest and most expensive markets in North America. Doing so has generated over $25 million in equity for my partners, and I want to teach you how to do the same. In this video, I'm going to give you a simple no BS framework to vet a multifamily operator before you wire a single dollar. Think of this as your filter to separate real operators from just good marketers. Look, you guys, I've been doing real estate for a very long time, and I've been raising capital into those deals since the day that I started. My very first joint venture was my very first deal when I bought my house with my best friend at 21 years old. That was a joint venture where I raised capital, and I had to have a meeting with his parents. When I asked him to invest into a house, that was crazy talk back then. And the first thing I got was a call from his parents. They call me up and they're like, "What the hell are you talking to our son about taking 20 grand out of his RSPs for?" And I was like, "Well, I want to buy a house and I got money to put in as well." So first thing they did was they said, "Let's have dinner." So I sat down and I had dinner with his parents. That was my first meeting. I didn't really expect that to happen. And I didn't really realize what was going on as well. But what they were doing was they were asking me questions. What are your intentions? Where did you get this idea? What are you planning to do? Where are you planning to go? What's your downside? What happens if things don't go well? These are all questions that I was being asked at dinner. And the good thing about it, now that I look back and reflect on it, is that I wasn't squirming at all. I actually felt very comfortable in my own skin because I was able to answer the questions very directly. My parents told me that buying a house was a good idea. I asked them if they thought that buying a house was a good idea. They obviously agreed because they owned a house. I asked them if they thought that it would be a good way for us to generate wealth long term. I asked if they thought that me and their son were competent enough to have jobs that were going to pay the bills in the event that things didn't go well. And they agreed, and they saw my plan, and they bought into me. And by the end of that dinner, the deal was closed, and my friend and I bought our first deal, and that was our first home at 21 years old. And that was the beginning of my investment career. But for the last 10 years, I've been focused on multifamily commercial deals that have raised millions of dollars and acquired tens of millions of dollars of assets to do everything that we've done. And some things have gone well and some things haven't. And it's this video that I want you to watch so that you know exactly what to look for before you're handing your money over to some operator that just says that they're gonna do a good job, but doesn't have the proof or the experience to back it up. So step one, track record and battle scars. Don't ask how long have you been in real estate. Guys, that's just a throwaway question. Ask this instead. How many full cycle deals have you completed? From purchase to execution to sale. And can you walk me through your last 3? Full cycle means they actually bought it, executed the plan, and investors got their money back with a return. That's where you're gonna see if they can finish, not just start. Then ask, what's the worst deal that you've ever done and what you did about it? If they say that they've never had a bad deal, they're either new or they're lying. So don't be fooled, you guys. You want operator with battle scars, someone who owns their mistakes and can clearly explain what changed because of those lessons. A real power move is, can you send me a sample investor update from a real deal? You can black out all the private details. I don't need to see that, but I want to see the way that you communicate with your investors and how you send the information out. You'll see how they communicate when it's not just a pitch deck and a smile. And that's really important in this process. Step number 2, follow the money. Everybody says our interests are aligned. Cool, prove it. Ask, how much of your own cash do you actually have in the deal? And where do you sit in the capital stack? If they're putting in real money in the same shares or units as you, that's fantastic. That's a pretty good sign. But if their upside is mostly fees, acquisition fees, management fees, refinance fees, disposition fees, and they get paid no matter what, you're taking the risk, I promise. and they're taking the income. Then ask, in a downside scenario where things don't go as planned, and they never do, how are you going to get paid? And if they can't clearly explain how they get investors' capital back and protect you before the operator makes money, guys, that's a red flag. You want to hear things like the investors get paid all their capital back first, preferred rates of returns always get caught up before we take our share, and only then do we participate in the profits. Those are good signs and good indications and typical of a good deal. Step number 3, transparency and communication. Super, super important. Things don't always go as planned. There's good deals, there's bad deals, there's ebbs and flows and everything. But the number one thing that someone can do that's going to keep everybody at ease in a deal is transparency and communication. If they're slow, vague, or defensive before you even invest, that's an indication, because they're not just going to magically change and all of a sudden become clear and responsive after you've given them their money. In fact, they tend to get a little bit quieter after you've given them money because they should be working on the deal, and that's okay. But how they communicate with you during the process should be clearly identified up front so that there's no mis-expectations on either side. I can tell you from an operator's standpoint that it is way more work for me to manage the investors and manage the capital than it actually is for me to even do the deal sometimes. And that's okay if I'm actually doing the deal and I'm on track and I'm on budget and I'm on schedule. All those things are great signs, but I have to have a way to be able to communicate that. And on the flip side, when things aren't going well, you still have to keep up and maintain that communication and that momentum so that you're not leaving people in the dark and giving them any extra reason to feel uncertain or more at risk than they already could be in some bad scenarios. And I've been there. Trust me, guys. The one thing that I have always been able to do is be honest and transparent with the people I've done business with. And I feel that that's gone a long way in holding up my reputation, at least as a good person. And that at the end of the day is exactly what you're looking for in a good operator. You want specifics, you want monthly or quarterly updates, you want rent collections and occupancy and all of the financial data that goes along with tracking to make sure that they're in control of the deal and that they can see red flags coming before they actually happen. Major CapEx progress, variances from the original plan, and what they're doing about it. That's all part of regular due diligence and operational management for any business, not just a real estate deal. But if people aren't doing that and they don't have the setup to do that, they're not just gonna fumble through it and figure it out along the way. And if they are, it might go okay, but usually it doesn't. So you wanna make sure those pieces are in place first. Just ask, can you show me a sample of your regular investor report from another deal? Can you show me your budget? Can you show me how you track? Do you have someone that manages the money? Who does manage the money? Is it you? Is it your bookkeeper? Is it on your team? Is it external? That's a pretty big factor when somebody's managing your money. The money, the budget, is the key piece to making sure everything is going on track and as planned. That tells you everything. Then say, walk me through your underwriting on this deal. As if I were sitting on your team. They should be able to explain the vacancy assumptions, the rent growth, the expense ratios, the interest rate assumptions, the exit cap rate in plain English. This might sound complicated to you guys, but this is all stuff that happens on spreadsheets in minutes, if not hours, of due diligence on doing a deal. And this should be stuff that they should be giving you in the data room anyways. You shouldn't be having to fumble your way through this or be asking them. If you have to pry this out of their hands, that's another red flag and something that wouldn't make me feel very comfortable. You should be getting a data room completely full of all of the documents that give you probably more information than you need. And that's what you want. And then if you don't understand how to go through that stuff, then you can get somebody else to come on your team or come on your side and take a look at the information to help you understand what you're looking at. And that's a good sign. When you've got too much information, it's usually a good sign that the operator is doing their job and it's just a regular course of due diligence for them, and they're sending you to a data room to show you all the information that they already know that you're gonna ask. Step number 4, team and infrastructure. One charismatic operator on YouTube does not run a 200 unit building alone, okay? I know, because I operate hundreds of units. And I know that I have a team behind me, and I know that I wouldn't be able to do it without a team. And if I did do it on my own, there is only so much that I'm going to be able to handle. And so if I am the owner of a few hundred units, and that's all that I do, how do you expect me to go and take on a massive acquisition and construction and renovation project without the proper help in place? It's just not going to happen, you guys. You want to ask, Who's your property management company? How long have you worked together? And what other assets do they manage for you? How long have they been in business? Show me their track record. You're looking for real ongoing relationships, not we'll figure it out as soon as we close kind of scenario. That's just not going to fly. Then ask, who's going to sign the debt? Who handles the construction? Who's your asset manager? And how often are they on site? Who's the personnel? The people doing construction are a big freaking deal, you guys. And usually I've got somebody on my team that has construction experience so that they can oversee the general contractor or the contractors on site. Because that's, although I know that stuff and I know it very well, it's just not stuff that I want to be managing on a regular basis. And so when I don't have my hands on the wheel every single day watching that stuff, I need to know that there is someone in place that's going to. You're not investing into a business here. You're gambling on a personality if you don't have these things in check. And that's just not okay. Don't do that. Businesses have teams that have experience, that have done the thing that they're doing before, and they've done it well, and they have proof that they can do that. Which brings you to step number 5, references and reputation. Can you introduce me to 2 or 3 of your current investors, including someone who's been with you through a tough deal? Talk to those investors. Ask them, when things weren't going as planned, did you still feel informed and respected? And do the basics. Google them. Look for lawsuits, complaints, regulatory issues. If you see smoke, assume there's fire. And don't just make assumptions, you guys, because I've got things on my track record that you could look back and people say things about people that, sometimes aren't true, sometimes they are, sometimes they're blown out of proportion. But at the end of the day, you're not doing it to hold it against somebody. You're doing it to ask them questions about it. And all you want is real answers, and to know how they answer tough questions when they're faced with it. That's what I look for. I want someone who's made mistakes. In fact, I would prefer to work with someone who's made big mistakes, because that means that they're probably not going to make them again. And if that person can be honest with me and they can be transparent and walk me through what happened and tell me how they're going to utilize that in order to make sure that it never happens again, that gives me more comfort than any spreadsheet you could ever show me. And I implore you to use that same methodology when you're talking to people. Use truth, ask hard questions, and see what your gut says. You're not trying to find a perfect operator. You're trying to find an honest, competent, battle-tested operator who protects the downside first and treats investors like partners, not like an ATM. Before you invest into any multifamily deal, run the operator through this filter. Do they have a real track record and scars they're willing to show you? Is their money truly aligned with yours? i.e., do you get all of your money before they get a dime? That's a good sign. Investing in the deal is obviously one big indication that your money is aligned, but that's not always the case, and that's okay. Do they communicate clearly and consistently? Do they have a real team and infrastructure behind them? Do their existing investors still trust them after a tough year or a tough deal? If the answer is yes to those, you're not just chasing returns. You're building wealth with someone who actually knows how to drive the bus. So hopefully that helps you guys understand a little bit more about the questions that you should be asking and the things that you should be thinking before just diving into any deal that has a shiny marketing package. And now that you know how to vet a multifamily operator before you invest, you're already way ahead of most people that just get sold by the pitch deck and the hype. And you don't want to be one of those people, you guys. So if you found this video helpful, you already know that the best way to support me in my journey is to like, share, and follow along. And if you want to know more about how to get involved, click the link below and find out how you can live your ultimate real estate lifestyle. Love you guys. See you on the next video.